And as I said, I think for the really speculative stocks, they actually peaked in the first to second quarter of last year, right around the time that Powell was denying there was any bubble.
Right. And
So,
we were at
yes,
the height of our monetary plus fiscal stimulus, and it just looked like endless amounts of trillions was the new normal.
right. And of course, a lot of that did flow into the stock market. A lot of the stimmy checks flowed into the meme stocks and the cryptos. And I've got one chapter in my book that's, I call it the insanity bubble. I mean, it was the poster child for that was, in my opinion, Dogecoin, which got up to an $88 billion market cap, which was more than some US blue chips. And the founder, Billy Marcus, said, it's a joke. What are you thinking? It's not worth anything. And he kept saying that all the way up. I think he started saying that when it hit 20 billion. And now, of course, it's been crushed, but it's still 8 billion or so, maybe.
It's still over 8 billion in market cap right now. Yeah, I looked at it this morning. I remember too, someone was asking him over the past year, what he was thinking. They asked him some technical question about what he was thinking when he coded it, and he said, "I wasn't thinking anything. I just copied the Bitcoin code and spent maybe 45 minutes on it." I mean, literally just this total flyer, lark that became at one point a almost $90 billion market cap.
Yeah, I mean, you talk about GameStop and AMC and how ridiculous they got. They were a fraction of that. And they actually have a real business, even though those real businesses consistently lose money. But anyway, this whole profitless, disruptor thing that was so popular last year, I mean, those things are down 70, 80, 90%. And I don't think they've hit bottom. I mean, I guess, for some of these, there's really strong support at zero. It probably won't go negative like the futures price of oil did in April of 20. But,
right, which is so hard to wrap our brains around, only 2 years ago that it traded at a negative price. And now you're talking about the potential that it could go as high as $400 a barrel. It's just,
they say crazy. The cure for low prices is low prices.
Is low, yeah, exactly. And same is true. Cure for high prices is high prices, right? They organically destroy demand because people can't afford stuff. And then of course the Fed is out there actively trying to add a lot of tailwind to that, right? By raising the cost of capital here. So where do you sort of see this trajectory going from here? Does it accelerate into a fast decelerating economy and straight into recession? Do you see us being spiky, swinging back and forth? What path do you think we're most likely to take from here?
Well, I think we will see recession, and this is not what I felt a few months ago. I've kind of shifted with the data, kind of reluctantly. What I did think we were going to have virtually for sure was an earnings recession. And I think, I know you've had Stephanie Pomboy on. She's the one who really kind of opened my eyes to this idea of look at the PPI versus the CPI. So the PPI is basically what companies, their cost of goods sold, and CPI is what they get. So when the CPI is running really hot, the PPI relative to CPI is running really hot, it squeezes margins. And my gosh, I just saw that in Europe now, it's like the PPI is running at 36%. And I think that all gets back to the price of energy in Europe being so much higher. So in Wall Street, very similar to the Fed with their ridiculous 4% real GDP growth forecast for the second half, Wall Street's got a 10% earnings increase in the fourth quarter. And I think that's just nuts. I mean, I really do think we're going to have falling earnings in the second half of the year. So
sorry, I just want to underscore this because I've mentioned this a fair amount in the past week on this program, exactly what you're talking about, which is for whatever reason, analysts have been reluctant to bring down their growth projections for next year. I think the last time I heard that it was still about a 10% increase in the S&P earnings. And looking at the outlook that you're talking about, right? I mean, it's hard to make a credible case for that, right? And we're now beginning to see demand destruction. We're beginning to see companies, announce earnings and say, hey, we Target and Walmart were saying last quarter, hey, we stocked up and the demand didn't show up. And now we have this skyrocketing inventory and we've got a bunch of people around that we're not being able to employ fully. And we're seeing that in a number of other industries as well. So we are about to go into Q2 earnings seasons, right? We're here at the beginning of July. We're going to start having those earnings calls, in about 2 weeks or so for Q2. And the few that have come out already, I'm thinking like Micron just announced this thing like a week ago, where they crushed their Q2 numbers, revenue, earnings way above forecast, but they completely underwhelmed in terms of their forward guidance. And they said, look, we have to ratchet this stuff down based upon what we're seeing in real time at our stores right now. Stock got hammered, understandably. So is this new shoe to drop of Wall Street analysts waking up to the fact that an earnings recession can't be avoided at this point, and it's going to force them to bring down their forward earnings projections. Is that going to be the next and near-term shoe that's going to drop financial asset prices lower from here?
Well, certainly, I think stock prices are at risk. It might actually be good for the treasury market, but yes, I think that's right. And they are so perennially optimistic. It's kind of like the Fed. It takes an awful lot of evidence the other way to shift them. But what we were saying about Micron is exactly what I was referring to. I mean, here they say good numbers, which actually our analysts thought they would have good numbers, but their forecast is terrible. So I think that reflects just the rapidity with which the economic cycle is turning down. I mean, that's one company, but we're seeing lots and lots of evidence. You mentioned Target and Walmart, and there are some retailers that have reported good numbers, but that's tended to be the higher end. And maybe the canary in the coal mine is Restoration Hardware, which is kind of a bull market furniture stock. I mean,
it's completely consumer discretionary.
Right. And so when the high end folks are making a lot of money, and what I'd call monopoly money, kind of money from nothing and all these crazy things, then they go out and buy a lot of high end furniture, but their outlook is now very guarded as well. I just think this is happening. This decline, this deceleration is happening very, very rapidly. And it's, if you look at things like if the S&P is down 20% for more than 5 months, you get a recession. If you look at the leading economic indicators, 4 out of the last 5 months have been down, you get a recession 99% of the time, going back to 1959. When you have the 4-week moving average for initial jobless claims rise 60,000, which is what's happened here recently, you get a recession. All these things are all just suddenly lining up. And there's the view that, hey, that's good news, because if we have a recession, then the Fed's going to go on hold and then they'll start easing. But this Fed, I don't know, when they get focused on something, it takes an awful lot to get them to shift. And right now they're clearly focused on trying to control inflation. So it's going to take some awfully bad economic numbers, probably an unemployment rate that really starts to jump in a way they can't deny, that will cause them to reverse course. So I don't know whether they get to 4%. I think they're going to go higher. They're probably going to do 75 basis points this month, though it's a little less certain than it was a few weeks ago. But I mean, this is the problem: is you've got the Fed for the first time ever tightening into a bear market. You've also got them tightening into a clear slowdown, if not recession. This is pretty unprecedented. I know that's an overused word, but I think this qualifies.
If you enjoyed this video clip, click here to watch another one you should like.